This CK&W podcast is brought to you by Destination Toyota in Burnaby, your neighborhood Toyota store.
Glad you're with us. Excuse me, a lot's coming your way. By the way, I've got a bit of a cough and a cold, so I'll warn you about that. But that's why I'm happy to have Dom Violo coming with me. If you know the show, you've heard him before. Terrific guy on seasonality, and that is saying, I want to raise the probability of our investment success by knowing what patterns individual groups have, like the precious metals or individual stocks have you, as we come into the fall. Simple patterns like it's the old sell in May and go away and don't come back till Labor Day kind of thing. It's what patterns are repeated with some probability throughout the history of the markets. Don Violo will do there. He'll do a better job explaining what he's saying, by the way, than I just did. Also, Michael Levy on deck with me. I've got Ozzie Jurek. I've got a Goofy Award and a shocking stat of the week. So all of that is coming your way. But first off, if there's one thing, hey, we're good at it in the media and the public and politicians when it comes to economics and finance, it's fads. And one of the most popular today is concern over economic inequality. Now, this week, that concern, or at least a politicized version of it, seeped over into the StatsCan replacement product for the census. It replaces the census. It's called the National Household Survey. In it, for the first time, not only did they break down the population into 10 different income categories, but they also isolated the top 1% of income earners. Now, in an interview with Post Media, reported in the National Post, a spokesperson for StatsCan admitted that the motivation was due to the Occupy movement and all the media coverage it got, the focus on the 1%. So, by the way, there you have it. The Occupy movement did have an impact on both the media and StatsCan. Now, they didn't have a practical solution for anything, and they certainly didn't even have a coherent set of goals, but StatsCan was paying attention. Now, given that StatsCan is publicly funded, like others, I want to ask, to what end did they isolate the top income earners? I mean, was it to let us know that to be in the top 1% of income earners in this country, you have to make $191,000. That's the threshold. As you enter that or more, hey, now you're in the top 1%. And by the way, that wouldn't even qualify you for a mortgage for the average single detached home in Vancouver. Did they do it so we know that over 2/3 of those making that income have one or more university degrees? Did they do it to illustrate that those making $191,000 or more come from a wide variety of occupations in the public and private sectors? See, what they did let us know is that they make a heck of a lot more money than grade 10, 11, and 12 students. Incredibly, they are included when they compute the overall median income. So are part-time workers and pensioners. I mean, is anyone shocked, outside of some media groups, that our top 1%, working more than 50 hours a week on average, earn 7 times more than the median income of Canadians? That includes literally millions of people who are not in the job market full-time. Now, of course, talking about education levels or talking about the number of hours worked is not popular. I mean, work ethic is not fashionable right now, so forgive me for even bringing it up. But this is where I really run afoul for all those who tell me of their deep concern over income inequality. You see, I don't care about the 250,000 or so that make up the top 1% of income earners. I have never lost a wink of sleep over worrying about them. See, because my concern is the bottom 20% of income earners. Now, within that group, I'm not really worried about students or individuals who choose to work part-time for a variety of reasons, including maybe they're not the principal breadwinner in the family, or they have other sources of income. No, I'm worrying about the other part of that 20%. I'm talking about individuals and families who don't have enough money to afford the necessities of life. Now, what StatsCan did tell us is that those people receive significantly more in government transfers than they pay in. 50 to 70% of their income comes from government. But one aspect of the study we really do have to re-emphasize, and that is that link between education and earning power. As I mentioned, 2/3 of the top income earners have a university degree, one or more. I thought the surprising aspect was that that actual number wasn't even bigger, like into 80% or 90%. There's a good book out called Capitalism for the People, author Luigi Zingales, and he says the principal driver of income inequality remains education. The more educated you are, the higher your earnings are likely to be. I mean, come on, we've been getting told that for years. U.S. Census Bureau states that those with a college degree can expect to earn over 60% more in the course of their lifetime than those with just a high school diploma. Numerous studies in Canada, including one released in late August by the CIBC World Markets, reiterate that. They went further, though, and emphasized the degrees of which you're more likely to be in the higher earning category: engineering, architecture, other professional studies, as opposed to a Bachelor of Arts, whose value in terms of employability and the amount of money you earn extra has been diminishing. Now, one thing I want to make clear, I'm outraged, by the way, with the increase in the level of crony capitalism and the increase in the need to be politically connected, and it's so evident in the U.S. But poverty is not caused by the 1%, as so many seem to believe or pretend it is. Poverty is not caused by wealth. And the hollowness of the public debate is easily exposed. Come on, if we force the top 1% of income earners to leave the country, how would that help? Because there's so few, it wouldn't make a difference. How would it make things better if you got rid of those earning $80,000 or more? That's the top 10% in Canada, $80,000 or more. How would that help? No, the solution lies in focusing on the bottom end of the income scale, not the top end. I got time for a couple of calls, 604-280-9898, 604-280-9898, or 1-877-399-9898. I'll take a break. I'll come back. A couple of calls. I got Michael Levy on deck. Lots to talk about, both with gold and with the Canadian dollar. Don Violo. I've got Ozzie Jurek, Victor Adair's off this weekend, but I've also got a terrific Goofy Award for you. All of that coming your way right here on the Chorus Radio Network. We have time for a couple of calls here. 604-280-9898. 1-877-399-9898. Hey, a reminder today, by the way, we have online today, we're doing a webinar. It's a free webinar. It takes place after the show at 10 o'clock, 10:05, 10:10. We're going to talk with Steve Duchesne of Disney. Seeing the market right now and kind of dig in with him about not only what he's doing, but how he conceives of it. It's going to be a great opportunity. It's free. To do this. We haven't tried this before. It's the first time, but it's very easy. Just go to moneytalks.net and you can see how you sign in. It's absolutely easy to do that. But yeah, we'll be doing that just after the show today. So that's a free webinar. Steve Duchesne. It's going to be interesting. Also coming up, I've got Michael Levy in just a moment's time. Let me go to the phone lines here first, though. Jeff, go ahead, please.
Good morning. I was listening to your comment, and it got me thinking that in this country we tend to think of government as having lots of money, and we tend to. It seems like what I call a Robin Hood mentality towards the wealthier people, like sort of rob from the rich to give to the poor, and that doesn't seem to help, because all it does is chase investment away and do all this. And I was wondering why you think we sort of have that mentality in this country.
Well, I think you're accurate also. Jeff, I think there certainly has been an increasing focus on that. You know what's sad is I think it comes from literally an ideology and an approach that was in vogue in the 60s. And the challenge I have in answering that directly is that I don't see anything quantifiable. Nobody's gone out and tried to do a research study on that. So it's just a guess on my part. But I think I feel comfortable saying that we have an anti-business aura that is partially pushed through in the media, partially pushed through in the public school system, partially pushed through in Hollywood. But here's the thing that's really changed, even more important. What people, and a lot of those people, I'm absolutely astounded how many people get interviewed who have the same kind of worldview that they had in the 1960s and 70s. And this is where they lose credibility with me, especially when they start saying things like, I care about the poor, or I care about the income disparity issues. You know, in fact, if we did have a long look, we would see how many different programs we have in place that actually hurt low-income families. And you're phoning from British Columbia. You had a tremendous example there with the harmonized sales tax. The fact is, the harmonized sales tax was better for low-income people. Its rebate system, or it's, it sent a check directly to poor people that was significantly more than they were ever getting in a rebate system under PST. But that's one small example. There's just so many others. The fact that we have milk marketing boards raises the cost of dairy products. And again, who does that impact the most? I did a comment earlier this week about the impact, and 2 studies released in the last couple of weeks in the States, 2 studies chronicling the impact of new drilling technology and fracking, especially on natural gas prices, which anyone following energy knows are much lower. Well, they estimated it was saving families $1,200 every year already. $1,200 savings in their energy costs, and of course the group that pays the most percentage of their income toward energy is the poor. So that's why so many of these people, it rings hollow. But the number one thing they've got wrong is that we are well past the era of income redistribution. That was an old debate. We've already distributed the income. We have already promised distribution of income in the future in terms of health care and pensions that we have no money for. So the debate should be about wealth creation. If you care about making sure our programs, our social programs are going to be intact, and who does that impact again the most is the more vulnerable people in the low end of the income scale. Well, if you care about those people, then you should be caring about wealth creation. The distribution game is already done. We've already made those promises. And that's what's missing from that side. That's where I think people who favor big government have completely missed the boat. You can make all the promises you want. We could get subsidized daycare. We can give away pharmacare. We can have that debate all we want. We don't have the money for what we've already promised. It's clear. It's a fact. And we have not adjusted to that at this point. I'm sorry, we went on there. I got to take a break. I'll come back because I got Michael Levy on the line. I just want to make sure you're clear that today we're doing a free. It's free. That's the key thing. People want to know how much something costs. It's a free live webinar today right after the show. And if you go to moneytalks.net, the first thing you see, on the left is how to submit and join. You can register right now, and then you just keep going to Money Talks, do whatever you want, and then come back at 10 o'clock. But you see, it's very limited how many people can participate in this. So if you want to do this, it's going to be great. Steve Duchesne is going to be with me. He runs the GPS group of portfolios for Disnet, and I'm going to be asking him, what's your approach? How do you generally choose stocks? Specifically, what examples? What are you looking at right now? What are the key variables? So I think I'm very excited about doing this because I want to just bring that kind of detailed information to you. Well, it'll be about 40 minutes total. But anyways, go to moneytalks.net and you can click right on for the live webinar. Michael Levy joins me on the line right now. Michael, I want to come to the Canadian dollar first off here. And, last week we talked about the Canadian dollar was moving higher. Well, it sort of did budge up there. We didn't make a lot of progress this week, but how do you see it at this point?
Well, Mike, we actually about 2 weeks ago were at 93.90 cents, and this week during the trading on Friday we hit 96.90 cents. So it's been a 3-cent move higher, but now, as I thought the bottom might have been in around 94 cents or a bit under that, I think right now we've put in a temporary top. I think we're going to play in this range now, maybe the higher end of the range, but the Canadian dollar, there is no reason now for it to move any higher, but it has moved nicely off that bottom, and I think we're going to be range bound once again. And I go back to the old adage that Victor says, you say, I say, and many people say, I'm now going to let the market tell me what it wants to do, but I think we've pretty well reached a peak at close to 97 cents, at least for the time being.
Well, I want to make everybody a technical analyst right now, and that's people who look at charts and stuff, and talk about the drop. Say if we went, here's one of the fundamentals, sort of a technical analysis. We went from, say, 103, we pick a top there of 103, and we drop down, as you say, Mike, let's choose 94 to make it easy. So we had, in fact, a 9-cent move. So traditional technical analysis says that if you move down, whatever you move down, you might have a correction back up about half of that move. That's a real rule of thumb, kind of simplistic thing. So we're kind of in that phase. We've kind of been doing that, maybe get to 90, 97 and a half or something. The technical analysts would have a big smile on their face saying that's a classic kind of recovery from that drop. And we're seeing the opposite in gold, by the way. But again, that's probably what we're looking at, I would think.
Absolutely, Mike, and it has been a technical bounce, but very interesting with technical analysis is that we can always find a story to go along with the science, whatever it might be, that we crave a reason why, and we take a look at the technicals of the Canadian dollar, then we take a look at what's going on in our country and the fact that we are still a great place to invest. There's money coming into Canada, and so we say, okay, Canada's still a great place, and that's why the dollar's up. But maybe you can also say, because it went down, it's time for that technical bounce. You marry the two.
Coming up after top of the hour, I'm going to talk with Don Violo and talk about the seasonality of gold and many other things too, by the way, is saying what is usually, it's sort of like if people imagine this, if you're planting seeds, what would be the best season to do that? Well, I think we know historically that would be sort of in the spring, and then depending on which geographical area, we'd actually have even more refined date. Well, it's the same with gold, which is the gold season. But in the meantime, Mike, I want to talk to you quickly, and we may have to take a news break in this, Mike, but stay with me. Last week, we've had gold rallying pretty good, for a little bit here. Got over 1,400, into that 1,425 range. Last week we said, and I wrote this on the blog, it was one of those lucky times that I think I gave some pretty good advice, is that, boy, keep an eye on that 1,360 level. We backed off to that on Monday. I wrote something, and we broke through it on Tuesday. So did you think that was significant, first of all?
I did think it's significant, and Mike, let me say, I thought too, watch out for 1360. I did not think that we would go through it with the ease that we did. I thought that 1360 was a pretty good support level, but going through it almost like it didn't exist, held for a day or two, it actually even bounced off it, but even though it really looked like it didn't exist, I found that very, very significant that gold went through so easily, and it just shows the vulnerability of price of gold and the potential to the downside.
Yeah, I want to talk to you very quickly over in a minute or two before the break, Mike. Again, we've been seeing these divergences between what's happening in the futures market, and that's what we're really reporting on here, and what happens in the physical gold market. Again, there seemed to be a disconnect there.
There was, Mike, and let's just put this right out there. The futures market is what really runs the price of gold on a daily basis. That's between 6:30 and 10:30 Vancouver or Western time, or 9:30 and 1:30 Eastern time. 9:30, 1:30 Eastern time. That's when the actual market is open in New York. And when it closes, generally gold will be very quiet after that until it opens up in Asia later on in the day. We saw a huge disconnect there. In fact, gold was down very significantly. It was down about $22 on the COMEX, or on the New York trading. But as gold traded through outside of COMEX, or outside of the actual market, but traded till the close on Friday at about 1 or 1:30, it came back and finished up $4.75 on the day. So it got back all of that $22 loss, put on another $4.75, and closed at $13.2640. So traders who went home at 10:30 figured that's it for gold, down for the day, going for the weekend. And by the way, when it actually closed worldwide at 1:30, it was up on the day. So big surprise.
I'll ask you what you think Monday and Tuesday when we come back from the break.